In its short-term energy outlook update released this week, Energy Information Administration forecasts that U.S. crude oil production will average 9.4 million barrels per day in the second half of 2017, 340,000 barrels per day more than in the first half of 2017. Energy Information Administration's close monitoring of current rig activity in several producing regions shows continued production growth from tight oil formations, such as shale in the Permian region, driving overall production increases. The short-term energy outlook projects that the most significant production growth in the second half of 2017 will be in the Permian region. Permian production is forecast to grow to 2.6 million barrels per day in the second half of 2017, a 260,000 barrels per day increase from the first half of 2017. Production in the Permian continues to increase, in part as a result of West Texas Intermediate crude oil average monthly prices that have remained higher than $45/barrel since the second half of 2016. Extending across western Texas and southeastern New Mexico, the Permian region has developed into one of the more active drilling regions in the United States, because its large geographic size and favorable geology contain many prolific tight formations such as the Wolfcamp, Spraberry, and Bone Spring. Increases in proppant intensity, lateral lengths, and changes to slick water completions are also among the factors that have allowed the Permian to remain one of the most economic regions for oil production despite the low oil price environment. West Texas Intermediate spot prices averaged $50/barrel in the first half of 2017, spurring deployment of more rigs to the Permian, which rose steadily from 276 rigs in January to 380 rigs in September. The short-term energy outlook projects that the Permian region rig count will continue to grow from an average of 341 rigs in 2017 to 371 rigs in 2018, and the West Texas Intermediate price is forecast to average $49/barrel for the second half of 2017 and $51/barrel in 2018. The short-term energy outlook forecasts Niobrara and Anadarko production to grow by 75,000 barrels per day and 42,000 barrels per day, respectively, averaging 500,000 barrels per day and 460,000 barrels per day, respectively, for the second half of 2017. This growth makes these two regions the second and third largest contributors to the short-term energy outlook's projected growth between the first and second half of 2017. Production in the Niobrara and Anadarko regions has grown continuously since January 2017 in response to increasing rig activity and a monthly West Texas Intermediate price range from $45/barrel to $53/barrel during the year. With an expectation that prices will continue to be near this range, rig activity and production are expected to continue to grow. In the short-term energy outlook forecast, the Basin region is expected to maintain production at slightly less than 1.1 million barrels per day through 2017, increasing by 31,000 barrels per day between the first and second half of the year. The Basin region predominantly spans the Williston Basin, which contains the Bacon and the Three Forks formations. Although the Basin region is large in geographic size, 23 million acres, it contains fewer identified prolific formations than the Permian. In addition, operators in this region are affected by winter weather and have greater transportation constraints in moving oil to refineries and markets. Rigs in the Basin region grew from 35 in January to 44 in May of this year, increasing further to 51 in September. The short-term energy outlook forecasts production in the Eagle Ford region to remain relatively flat in the second half of 2017 at 1.2 million barrels per day, a 5,000 barrels per day increase from the first half of 2017. Compared with the Permian, the Eagle Ford region has a significantly smaller geographic area with fewer prolific stacked formations and fewer opportunities to drill. Rigs in the Eagle Ford region grew from 57 to 98 from January through May of this year, but declined to 83 in September, in part as a result of a lagged response to lower West Texas Intermediate prices in the second quarter of 2017. More recently, the Eagle Ford region experienced temporary outages in production and rig activity in August and September because of Hurricane Harvey. Energy Information Administration expects Alaska production to remain relatively flat, averaging 460,000 barrels per day in the second half of 2017, a 22,000 barrel per day decrease from the first half of 2017, because of seasonal maintenance on the Trans-Alaska Pipeline system during the third quarter. Production in the rest of the United States is expected to remain fairly constant, with relatively modest production declines in California, 30,000 barrel per day, and the federal offshore Gulf of Mexico, 7,000 barrel per day, in the second half of 2017. In the lower 48 states, observed rig counts typically follow changes in the West Texas Intermediate price with an approximate 4-month lag. In addition to responding to the West Texas Intermediate price, rig counts are related to cash flow and profitability. If returns are positive at a given price level, an operator could choose to add rigs. In that scenario, prices do not have to continually rise to support increases in rig counts. For most predominantly tight oil regions to see continued growth in production, rig activity must continue to increase because of the well dynamics, which on average have high initial production rates but very fast declines, for example, 60% over the first 12 months of production. However, with the number of rigs continuing to increase, especially in the Permian, Energy Information Administration has assessed that new wells are being drilled at a pace sufficient to maintain and increase production levels. If that trend changes, Energy Information Administration will continue its process of adjusting its forecast in regular monthly short-term energy outlook updates. Energy Information Administration models oil production monthly in the short-term energy outlook at the state and regional levels. The short-term energy outlook forecast is based on recent trends in drilling and production and on anticipated future changes, driven largely by the West Texas Intermediate price. Energy Information Administration evaluates past production trends on a well-by-well basis for all production documented since 2014 and uses that history to estimate future well performance and decline rates at the state and regional levels. As indicated above, Energy Information Administration has observed that changes in the West Texas Intermediate price affect the number of active drilling rigs within about 4 months. Changes in the number of active rigs lead to changes in production volumes within about 2 months. Consequently, the short-term energy outlook oil production forecast is based on the historical observation that changes in production volumes typically occur about 6 months after a change in the price of crude oil. The forecast is also influenced by estimates of cash flow and production costs, which vary by region and over time. In addition, the short-term energy outlook makes assumptions regarding how the inventory of drilled but uncompleted wells responds to price and how that response affects production at the state and regional levels. All historical production data are benchmarked monthly to the EIA 914 survey data and to Energy Information Administration's Petroleum Supply Monthly (PSM) estimates at the state level. The October short-term energy outlook forecast for oil production is benchmarked to the Petroleum Supply Monthly data for July 2017. Since it started in 2016, the Dallas Fed Energy Survey quarterly business indicator of the share of exploration and production firms that think oil production will increase or decrease has moved consistently with Energy Information Administration's 914 survey of oil production. Consistent with the updated short-term energy outlook forecast for U.S. oil production, the recently released 2017 third quarter report from the Dallas Fed Survey, July-September, shows expectations of an increase in oil production in Texas, New Mexico, and northern Louisiana from an index of 10.2 in the second quarter to 19.3 in the third quarter. Forecasting crude oil production is a dynamic process because of many uncertainties. Not all operators respond to price movements at the same time, which leads to uncertainty in the timing and degree of change in the production trend. Constantly evolving drilling practices within the industry, changes in well performance, pipeline infrastructure, and weather events can also have significant influence on the short-term outlook for crude oil production in the lower 48 states. Production estimates have shifted and are likely to continue to shift as new geological information is gained, long-term well productivity is observed, and technological advances and better operational practices improve well productivity and reduce costs. Potential changes in market dynamics, such as recent indications that investors may require companies to focus more on returns and less on production growth, also add uncertainty to the pace and level of future production. To get faster updates and the latest news from the oil and gas industry, please subscribe to the YouTube New Video channel and connect with us on Facebook, Twitter or LinkedIn.